While being slightly fast-paced, Plug Power Inc., trading under the ticker symbol PLUG, is currently active in the market, priced at $3.96, reflecting a significant intraday climb of 4.34%, an increase of 16 cents per share. This movement is not just a flicker on the screen, it's the latest chapter in one of the most polarizing stories in the renewable energy sector. The immediate reality of this upward tick is a stark contrast to the heavy sentiment that has often shrouded the stock. Many investors, conditioned by months of volatility and concerning cash burn rates, might see today's green candle as just another blip in a long, painful downtrend. The prevailing expectation is one of caution, a belief that any rally is transient, a mere prelude to the next leg down. But this is where reality starts to diverge sharply from the common narrative. The surge we are witnessing isn't happening in a vacuum. It's being fueled by a potent combination of massive trading volumes, significant option activity, and a recent string of announcements that suggest a fundamental shift may be underway, forcing even the most bearish observers to reconsider their positions on this hydrogen fuel cell pioneer. For too long, the conversation around Plug Power has been dominated by its staggering losses and its seemingly endless need for capital. It's a simple, easy-to-digest story, a company with a revolutionary vision but a balance sheet that bleeds red ink. This has been the expectation hammered into the market's consciousness quarter after quarter. And it's not without merit. A look at the company's financials reveals a history of negative profit margins and a cash flow statement that would make most conservative investors run for the hills. This is the reality that has fed the bears and tested the faith of the bulls. However, to stop there is to miss the far more complex and dynamic reality unfolding right now. The deeper analysis reveals a company at a critical inflection point. Institutional ownership, while still showing some signs of caution, has seen notable shifts. Large block trades and increased activity from certain funds suggest that sophisticated money is beginning to price in a future that looks very different from its past. This isn't just retail speculation, it's a calculated bet on the burgeoning green hydrogen economy, an arena where Plug Power, despite its flaws, has established an undeniable first-mover advantage. Platforms like Fidelity and Interactive Brokers are seeing immense trading volume, indicating a broad-based reevaluation of the stock's potential. Investors managing their portfolios through services like Schwab Intelligent Portfolios or self-investing on platforms such as Robinhood and SoFi Invest are all part of this renewed interest, contributing to the staggering volume that has recently pushed the stock to new 52-week highs. Recent stock movement has been nothing short of breathtaking. We've seen daily swings that would be considered momentous for other companies become almost commonplace for PLU. Last week alone, the stock experienced a parabolic move, soaring over 60% and hitting a 52-week high, driven by a confluence of positive catalysts. A key driver was the announcement of the delivery of a 1-megawatt electrolyzer system to a major energy company in Portugal, a tangible sign of its technology gaining traction in the European market, which is aggressively pursuing green hydrogen initiatives. This news was compounded by bullish analyst commentary, with firms like H.C. Weinberg reiterating a buy rating and setting price targets that suggest substantial upside from current levels. This flurry of positive news triggered a cascade of buying, with trading volumes exploding to several times the daily average. This is the kind of momentum that can signal a genuine change in market perception, moving beyond the day traders and capturing the attention of long-term growth investors who are now looking at the broader energy transition. The high short interest that has plagued the stock for years is now becoming a double-edged sword. Any significant positive momentum has the potential to trigger a massive short squeeze, further amplifying upward price movement. It's a high-stakes game of chicken, and right now the bulls are firmly in the driver's seat. So, what exactly does Plug Power do? At its core, the company is an end-to-end provider of hydrogen fuel cell solutions. It designs, develops, and manufactures the systems, provides the hydrogen fuel to power them, and offers the infrastructure to support them. Its primary products include the GenDrive fuel cells that replace traditional batteries in electric material handling vehicles. Think forklifts in massive warehouses for companies like Amazon and Walmart. This has been its bread and butter business for years. But the bigger, more exciting part of the story lies in its expansion into stationary power generation, on-road electric vehicles, and, most importantly, the production of green hydrogen itself through its electrolyzer technology. This is where the company's grand vision lies, to become a global leader in the green hydrogen ecosystem. Past performance has been a painful teacher for early investors. The stock's history is a testament to the boom and bust cycles of speculative technology. Yet, older reports and past performance metrics may be losing their predictive power in the face of a rapidly changing energy landscape. Government initiatives like the Inflation Reduction Act in the United States offer substantial tax credits for green hydrogen production, fundamentally altering the economic equation for companies like Plug Power. The expectation was that these credits would take time to impact the bottom line, but the reality is that they are already accelerating investment decisions and project timelines across the industry, creating a demand tailwind that simply did not exist a few years ago. Looking to the future, the outlook for Plug Power is a landscape of immense opportunity fraught with significant risk. The bull case scenario sees the company successfully scaling its hydrogen production facilities, driving down costs, and securing long-term supply agreements that finally pave the way to profitability. Catalysts on the horizon include the successful commissioning of its new gigafactories in New York and Georgia, which will dramatically increase its manufacturing capacity for fuel cells and electrolyzers. Further partnerships with major energy and logistics companies could provide the validation and revenue streams to silence the critics. On the other hand, the risks remain very real. The company's ability to manage its cash burn and secure additional financing without excessively diluting shareholders is paramount. Competition is intensifying, with industrial giants and nimble startups alike vying for a piece of the hydrogen pie. Any delays in project execution or technological setbacks could severely punish the stock. The tension between the expectation of continued financial struggles and the reality of its strategic positioning in a multi-trillion-dollar emerging industry is what makes Plug Power such a compelling and volatile investment. Comment below with your thoughts on the biggest challenge facing the green hydrogen industry today. In summary, the story of Plug Power is a classic battle between a painful past and a promising yet uncertain future. The market has long held the expectation that this is a cash-incinerating enterprise with a great story but a broken business model. Today's live price action and the underlying institutional and retail activity visible across every major investment platform from Fidelity Investments to the Robinhood app suggests that this narrative is being aggressively challenged. The deeper reality is that Plug Power is a company in transition, benefiting from powerful secular tailwinds and government support that could finally allow its ambitious vision to translate into financial success. The road ahead will undoubtedly be bumpy, but for those with a high tolerance for risk and a belief in the future of hydrogen, the potential rewards are substantial. The expectation of failure is being met with the reality of progress, and that is a dynamic that every investor should be watching.